Hello friends, welcome back to another video. Again, this video turned out to be an Apollo Microsystems. I did not expect that I would be making this video, but nevertheless, yeah, good that I am making this video. So before going into the video, so let me give the regular disclaimer. So I am not a SEBI registered analyst, and then this is not also a buy sell recommendation. Do your own research, and then if you are convinced, so you can take actions accordingly. So this is an interesting video. So this is actually speaks about, in this video I would like to kind of address very practical aspect of trading. So this is the reality of actually trading. So many people give so many fancy and rosy pictures about trading, saying okay, this stock has become 4x, 5x, 10x, all those things. Yeah, stock will definitely become 5x and 10x, but whether you and I stay in that stock till it becomes 10x is a big question. I think nobody actually would stay. That's the reality of the stock market, because the point is, when it gives those pullbacks or when it gives those red candles, that is when your emotions would really, and then your technical analysis, your experience, your emotions, everything will come into picture, determining whether you are going to exit after, let's say, 10-15% profit to 80-100% of profit. So that's a big difference. But practically any swing trader would never actually sit in that long trends, and then he would never actually capture those long trends, because he will continuously track market day after day, and then anytime one big red candle forms, then he will have his tantrums, emotions and everything coming into picture, and then he will exit at any point of time quickly. But that's how the life of a um, uh, swing trader is, because the swing trader, the way that he does is, he does not look at one trade and sitting for a long time. That's the job of investor. But swing trader will quickly kind of look for return on his overall investment. It doesn't matter whether he misses big trends or not. Having said that, so let me just analyze what is happening in Apollo Microsystems and then the previous videos that I have made. In the previous videos that I have made, I said on 4th September, the video, I said it's a good time to book profits. And then that's rightly so. After that, the correction was actually very big. In fact, actually it turned out to be 15%. 15% is quite a big profit, unless you entered somewhere at 110. But in case if you had entered at, let's say, 220, that is usual place where people would enter, then your profit is 45%, and 45%, and then out of that 45%, around 15% eroding, you are left with 25%. And when you look at your P&L account, and then you would definitely exit. So exiting at this point 320 is a good decision. And then rightly so, this red candle which came on Monday, that is 8th September, was a very big candle. It never looked like a profit booking, but rather it looked like a correction. And then the ninth candle, the is a very important candle, wherein it tried to actually follow through the 8th September candle, but the 9th September candle, that follow through was not there. It was arrested. In one sense, that follow through was arrested. If you see, buyers kind of bought it, but sellers pushed it, tried to push it down, but they could not push it down, and then it was like a kind of dozy in a small downtrend. So, and then that was actually turned out to be a crucial one, and then this candle tried to go up. This candle also tried to go up. Ideally, today's candle, I had expected that it would actually come down. That was the initial reading. But what did today's candle did? Today's candle actually, big green candle closing above the previous resistance. If you see that previous resistance, the close is 304, and today's the high is 321, and today's close is 322. That means it has closed its previous barrier and then closed above the previous barrier. So that's an important indication that it is giving. What it is saying is, it is saying, look, whatever these three red candles, those three red candles are not a correction but a pullback. So this is an important dilemma for a any trader, may it be an intraday trader, swing trader, identifying the difference between a pullback in an ongoing trend vis-a-vis correction. In all practical sense, this three candles seem to be a correction, but nobody would be able to tell whether it is a correction or pullback. People will say that okay, when the correction pullback will be very mild, and then correction will be aggressive. But in this case, it turned out to be very aggressive because this candle is very aggressive, and then this is 15% is very aggressive. So, and then they will say volume analysis. I have actually kept volumes today. They say that volumes will be in the pullback, volume is low compared to the uptrend, and then so on and so forth. But 100% bookish knowledge will never work. In stock market, we always there will be confusions. Still, this 320 booking is a good a choice because booking partial profits. Now, whoever has booked a partial profits, excellent, and then remaining things now you can actually hold. And then what to do? What to look for? Now, this candle does not mean that it has overturned the downtrend and it is a correction and it is going uptrend. That does not mean that. We need to wait and watch for 1 or 2 days. So tomorrow can be anything. Okay, tomorrow can be anything. For example, few possibilities I just wanted to kind of show you. Okay, tomorrow you can see something like this. Okay, let me just do this. Okay, tomorrow you can have, that's on Monday. So you can have a candle like this. So which is a red candle. That red candle, if it is an engulfing candle, then all that you are going to see is you are going to see a downtrend. That means it's a correction only. So it's like correction and it will stay there, and then it can even come down till this stage also. So it can even come down till that stage also. But still, whatever the initial prediction is there, that still stays. That means this red candle is a correction. This is going to be a double top, and then it will come down. Either it will halt there or halt here, and then again after consolidation it will go up. But next 2 days or next few days, if this breakout sustains, that means if the price holds above this 320 level, and then that means if it is holding above 320 level, that means it's going to go up. That means it's this phase is only a pullback. This whatever that you are seeing here, let me just mark that out. So this phase, we call it as only a pullback now. This is no longer a correction. If the price sustains above 320 and goes above, but if there is a aggressive engulfing candle, and then price comes down, so then this we consider it as only pullback. The only if it the price comes down, then we call it as correction. But we will only know it afterwards. The big difference is we will only know whether that is a correction or not. Most of the times we know only afterwards, not before. If it is before, then nobody would obviously exit, right? So everybody would stay and then would ride the trend. But riding the trend, as people portray in newspapers, YouTube channels, that's all fake. That's not at all real. Real trading is where to exit. That's a big challenge. You might actually have a good entry, but you may not have a good exit is equally important, as important as an entry point is, which we will not be able to decide. That's a reality. So booking profits partially is a staggered exit is always a good idea. So booking partial profits here would allow you kind of to ride the trend also now with whatever remaining quantity that you have. So with that quantity you can ride the trend. If it goes above, even if it falls down, then you again know that it is coming down and it's going to be a correction, then you can exit the remaining quantity as well. So that's the reality of the trader. So the important point which I wanted to drive through this video is trading the way that you see it in YouTube and then the way that you see it in newspapers is never like that. So it is not like, okay, stock became your 1 lakh became 1 crore. That does not happen actually. So you have to stay in the trend. You cannot stay in the trend. Staying in the trend is the riding the trend. Staying in the trend is the biggest challenge for any trader. It's extremely difficult to decide where the trend is ending. So especially for those who regularly uh, see the chart, because the temptation is to book the profits when there are red candles, especially because all the stocks will never obey the bookish principles, because the variations in the stock markets are too many. You will never know that whether it is a correction. So there are stocks where the correction is here and then it went and then double top, that correction has gone on for years. That may not happen in this stock, but that is a reality that will happen, gone on for years. So that could happen, but that may not happen in this stock. But I'm saying, so it's dangerous to get stuck. So it's good to book profits, partial profits, and ride the trend. That helps you to ride the trend. So important point is to identify whether it is a pullback or a correction. Not very easy, but maybe slowly comes, and in the process of it, you will go wrong sometimes, and then you will become correct. So to balance both, booking staggered profits and partial profits is the best idea. So just wanted to kind of drive some of the important and realities of the trading through this talk and through this video. Hope you like this analysis, and if you like this analysis, consider subscribing to my channel, and then please share it with your friends and family. So till I post the next video, we will see you. Bye.